Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Well, cheers to a new trading week and the best day of every trading week, and that is Monday Retail Trading Team. I'm Mastro coming to you live from Puppet Show Central with your routine briefing. Having an excellent hair day today, as you can see, so we'll very quickly diminish my profile on the screen and get going here. Excuse my informal wear. I'm not wearing the tie today, so I apologize for not giving you a nice colorful open. But we're here and we're excited, and we're gonna look at what we got going on for this lovely second to last week. Is it? Yes, second to last week of May, last full week of May, some might say. And that was not an intentional rhyme. So we're gonna start today's video by talking about the macro side of things, and then we'll go into our warm up and all that other loveliness. So not too much on the macro front. Really, the main thing, as anyone with a internet connection knows, is the drama around this debt ceiling nonsense. This comes around, seems like pretty often. So we'll see how this resolves. Right now, the volatility is telling us that nobody's really too concerned about any type of big surprise here. So we'll see if that persists. I really think that the price action and what's going on in volatility still supports that bull case. That's not to say that there won't be some type of pullback. Yet I don't think we're looking necessarily for this to be the top of the move quite yet. So we'll look at some potential areas that may change that assumption. Yet right now we're still in that zero gamma area where the dealers don't really have any reason to move the market very strongly one way or another. It's going to really take a catalyst and some outside force to do so, because where we are right now, the big boys are just printing money and going golfing nice and early. So that's what we got going on the macro front. So we can move right into our lovely little warm-up document. And what's going on here? Well, not too much. Again, zero to gamma type environment where you have that neutral overnight inventory balance. We had a nice little gap down, immediately corrected, and now we're hanging out just kind of slightly above where that gap area is and slightly below that overnight low. So you can see our levels for today. That's really where all the action I would expect would be kind of between that 41.86 area and that 42.26. Obviously, a break either way can definitely lead to some extension. So we'll be watching for that, obviously, as the day progresses. So you do have that bearish look for that first 30 minute. You have that open test drive. So below 22 especially, I think the momentum lends to the bears, and as we look to volatility, we'll get another important level there. Yeah, as it stands, I really just think it's pretty simple. Until that 42.22 is taken out, remember, open test drive, you can read about the various types of open by clicking on this first 30 link here. Until those open test drives are unwound, you typically want to trade on the side of that momentum. So right now that's down. You do have that rotational look in the TPO, as we'll see, implying kind of that aggression away from the edges, and we will see if that continues. So besides that, we just have the expected moves today. The high on this is SPX, the high being 42.15 and the low of that range being 41.70. So Rule 16 says we will close somewhere between there, and it's an outlier outside of that. So that's what we got going on there. I'll keep this document updated as the day goes on, if it becomes relevant to change anything. and you can see that happen as the day progresses. So that's in the warm-up, excuse me, that is in the description of this video. The warm-up document says warm up with me here. This is the document I'm referring to. And I also keep you updated on the Twitters, as I always say at the end of these, routine trader on the Twitters as well for those updates. So that's what we got going on in the warm-up. Now let's jump into the price action itself. Going back to our chart here, you can see you're getting that open test drive, slight bias to the downside that is continuing here. So be watching this as the day progresses. That's just the execution chart. Really what we're looking at to start off here is what's going on the macro front. So we do have a couple interesting developments on the macro side of things today. And that's first going to be, you can see that big volume spike, relative volume spike on Friday that created a nice swing high to trade around. So the assumption might be if we do pop above that swing high, and definitely if we take out this gap and start to build, that will pretty quickly move toward that 426 area. Keep in mind general volume profile behavior. That's what this is. This thing on the side of the screen here is, that's a volume profile. Typical volume profile behavior is once you exceed above or below the POC, price likes to go test the high side or low side of things. So the value area high, value area low. Right now we're on the upside, top side, we'll say, of that POC. So right now that value area high is about 428. So this volume profile comes from the high. That's what I'm looking at. In case everybody has something different, I'm just looking at that volume profile from the lifetime high. Currently 428 is that value area high, and probably a magnet once we get through this gap cluster. So be watching that swing high from Friday. Like I said, good volume. It's OPEX, no surprise we had good volume. Yeah, good volume and a nice little vantage point to be looking at as the tape develops here. So alternative path, if we do get that pullback that some are hoping for, volatility is not yet implying, but hey, you never know, would be for us to go and test that POC. So pop back down to that 410 to 412 area, and then either bouncing from there or falling back through. And if we do fall through that POC, I think you're going to see a pretty quick move down to at least that 50 SMA area, right below where that gap is at about 407.20, I believe, and possibly a lot lower. So that's kind of the two scenarios, or really three scenarios I'm watching. First being we just consolidate around this 4 sigma, that's what this line is here, this 4 sigma VWAP band, and then slowly drift higher toward those gaps, cleaning up those gaps, and eventually confronting that value area high. Second scenario being a retrace to that POC between 410 and 412, and then bouncing from there. And then finally, that third scenario, which I think is most unlikely until volatility really gets going, is going right through that POC. And like I said, if we do that, it's a pretty quick move, I think, to that 408 area, and likely perhaps even a continued move lower, because it'd be losing all those major trend lines, and that would just be a pretty big failure. So probably go back down to test the, let's say, 400 SPY area if that does occur. So that's what I'm looking at on the macro front. I think we have a couple good vantage points there. Really, just immediately, the most important is just watching what happens around that swing high, watching what happens if and when we do confront this trend line here, and then even the POC. But really, as I said at the very beginning, this is just kind of going to be the way it is until we surpass some of these VIX areas that I'm going to point out. The bulls have complete control, and right now just consolidation, a recharge, if you will, to kind of move away from this 4 sigma VWAP band, because that is by any stretch of the imagination signifying that we're overbought. So not huge on RSI and other overbought, oversold oscillators, but that VWAP is very reliable, and it just makes sense given the very basics of auction market theory. So in any case, that's what I got going on there. That's the macro chart. Let's move right to volatility, actually, because I think that's probably the most important other chart in our book today. So what's going on here, remember from Friday, I was harping on that 1960 level, saying that reclaim was going to potentially lead to at least a nice consolidation and perhaps even a good short. So if you recall, the first little strategic element of Friday's volatility analysis was getting short and then adding once we reclaimed 1960. So if you're doing that pyramid, you would have your second add-on now, and you'd be looking for that final at a reclaim of that 2020 area. So you can see this is the trend line down from when we had that spike at the beginning of the month. We are currently trying to reclaim that 1960 area. I dare say basing, potentially accepting that area, and we'll be watching what happens at that 1920. So I'm going to have to add another line here. If we do pop back below Friday's low of volatility, that's probably going to signal another decent rally coming our way. So what's going on in terms of the bigger picture? Once we get above that 1920, you want to see us base kind of like we're doing now, and you want to see a continuation much higher. And really, if we get above 2180 is when I would be looking for a retest of that POC. And if we can hold 2180 and get above that, once we get above 24 is when I'll be looking for potentially going through that POC. So the bears still have a lot of room, a lot of ground to cover, and the bulls, like I said, are still in complete control. Yet we're kind of seeing that those signals of consolidation. No surprise ahead of that debt ceiling deal, quote unquote, whatever happens there. So as it stands, I do like that 2/3 position on the short out of the money calls, yet still continuing that long beta weight delta overall, just because of the general trend and what volatility, if you zoom out, is telling us. So you zoom out, still in a strong downtrend, very near the low of years, and also what the price action is telling us, which is that we broke out of that consolidation for that 6 weeks consolidation to the upside, and we're still just kind of, I think, recharging to keep moving higher until something changes. So that's what I got going on the macro picture. That's really what this briefing is about today. It's more of looking at macro things a little more zoomed out than normal, because I think that's really the key things to keep in mind right now. So just because we always look at our TPO, we want to look intraday, what's going on here at that high from not the high, but the RTH high from Friday. You have a poor high there. We did clean up the single, so we're just watching what happens around that poor high, and that is going to correspond to, I think, a pretty quick move above that swing high, and then potentially continuing higher. Obviously, as always, looking for that false break, really in this 30 to 40 area if we do get that move. Yet intraday, like I said, below that high of day so far, about that 42.22. We're really looking to see, I think, the bears kind of control this thing, and once we do unwind that, probably the opposite might be true. We may very well go after that swing high. So very much consolidation look today. No surprise given everything that's going on. Because I have to say it, if we do continue going lower, first levels of interest are about 50 to 70. So 70 itself would be that naked POC from the extension last week, and then you have a couple singles right around that 50 area as well. So that is my bear case. I would be very surprised to see us get anywhere near those singles today for sure. And heck, I'd be surprised to see us get near that 70 area. So we'll see. So just pointing those out. And we do have that poor low as well at 30. So all our favorite levels from the past 6 weeks are still on the board. Yet I'm not really looking too much at this TPO today until something develops, just because I think everything's pretty simple. I would expect it to be a good consolidation type day. So if you're into the iron flies or iron condor strategies, until volatility really gets going, and again, just to point out that level one more time, that's going to be above 2020 for that first level. I think those strategies should work pretty well. So not trading advice, you know the deal, just kind of what I'm seeing for this lovely Monday. And that is all I see for this lovely Monday, so I'm going to leave it there for you. I'm going to get this newsletter out right after finishing this video, and I will be on the Twitch at noon for the 6th or 7th day in a row. So we've been having a good time there. Me and my one or two friends who like to hang out and hear those lovely transitions. So we'll be there again if you want to come hang out with us. And I will be on the Twitter periodically throughout the day at Routine Trader. Probably not as active as normal, just because it's a pretty consolidation type day, not too much going on. Yet I will be there if anything significant does develop, which you can also see in that warm-up document in the description of this video. So if you did enjoy today's content, you like that little macro overview, seeing the big picture, please give it a like. I'd appreciate that. It helps with the YouTube algorithm. And one of these days, we're going to consistently get these videos above 10 or at least 9 listeners, or watchers. Maybe you're listening and not watching. Whatever you're doing, I'd appreciate that like. So thank you for doing that. Thank you for hanging out, and stay classy until we talk again tomorrow.